let's understand that how are the technicals from the derivative space and even from the cash market shaping up at this point in time. Amar Singh is joining us from Angel One. Amar, will that be okay to say that the selling was majorly in mid cap and small cap? They were hammered the most. Indices have not seen that much of loss today. In fact, whatever cut came in, that was recovered also. What is your reading on the indices, Nifty, Bank Nifty both?
Yeah, thank you for having me on the show. So we definitely, what we saw today was that the benchmark indices are strongly supported anywhere around the 23,500 odd levels. And that we saw today as well. And as you rightly said, that the overall the breadth of the market still is quite weak, and that can be reflected in the advanced decline ratio, as you rightly put it. Having said that, what we are seeing is that in some of the heavyweights, including the likes of Reliance, there is a pullback. But the benchmark indices, if I'm looking at it from a technical perspective, they continue to witness a lot of selling pressure at higher levels. Because first talking about Nifty, if I look at Nifty, so somewhere or the other, Nifty is unable to breach and sustain above the 24,200, 24,300 zone, because that's acting as a very strong resistance zone. Because last week Nifty had made a high of 24,226. Then it has corrected recently this week itself, so 23,500 levels also. So we are seeing that there is selling pressure at higher levels, and that's we are definitely going to witness that. That's not going to change in the near term. We would witness a lot of consolidation, but as long as 23,200, 300 zone, support zone is not taken out, I wouldn't be unduly worried. But yes, if 23,200 is taken out, then we could witness some sharp sell-off. And there would have to be some reasons. One data point coming up on Friday, the US non-farm payrolls, that's going to be very important because that could definitely set a tone for the global markets as well as impacting our markets as well. As far as FIIs are concerned, they've been on the sell side. So that also, we are not seeing any changes. The other interesting thing is that crude oil prices have inched up. So they are still within manageable levels, but a 4% increase in crude oil prices in the month of January itself, both on the Brent and the WTI, clearly shows that there could be some concern there as well. So these are some factors which could drive the markets. But all in all, I would say IT looks positive because it's definitely benefiting out of the depreciation of the rupee hitting record levels, so record lows, I would say. So these are some factors which needs to be keep a watch on.
Highlighting that for us so nicely, lots of factors to watch out for when we're trying to gauge which way the market is headed. But amid a market like this, you did say selling pressure continues. You also said that IT looks good on the back of the rupee depreciation that we're seeing. What stocks would you suggest for our viewers? What's looking good? What's looking safe, rather, I should ask right now?
So if we look at what's looking safe, I would say Infosys is definitely one stock one can keep a close watch on, because Infosys has been doing, I would say, reasonably. It has been performing quite well. We are seeing some sort of consolidation there, but on any pullback in this stock can be looked at from a medium-term to long-term perspective. And if I look at some of the other IT names, so if I look at some of the other IT names, so we are seeing a lot of strength there as well. So one stock one can keep a close watch on is L&T Technology, because that has corrected from almost 6,000. Currently it's around 4,900 levels. So it's around very crucial support zone. So there could be a pullback here as well. And the other IT stock is, I would say, Persistent. Persistent, we've seen this stock really, it's been a one-sided way for this stock. Now it's slightly in the corrective mode, but any correction in this stock is a buying opportunity. So these are a couple of stocks one can definitely keep a close watch on. And yes, most important, even TCS looks good at the current levels, 4,000, at least on 4,100 levels towards 4,000 levels, if it's able to sustain and maintain. So we could expect some pullback. But one needs to remember that most of the IT stocks are going to witness some sort of consolidation going forward. Because we are going to have the new US president also come in. So what steps and actions he takes, that could have some impact. But overall, IT space should do well.
IT space should do well, and that's what is being reflected in the price movement also. This is ahead of the numbers. Thanks very much for joining in and giving your insights on the stock as well as on the markets.